So 12th problem, we are given three situations, situation A, B, C, and three financial plans, 1, 2 and 3. So we have to calculate the DOL, DFL, DCL in all the three situations. So what we have taken, situation A. In situation A, the fixed cost is given in the problem 2000. Fixed cost is 2000 for situation A. Now we have taken financial plans 1, 2 and 3. So sales are given 800 units at rupees 30, so 24,000 sales. Variable cost 800 units into 20 rupees, 16,000 for all. So sales minus variable cost, what we get? Contribution. So 8,000 rupees contribution. Fixed cost, here it is given fixed cost is 2,000. So 2,000 we subtract. So contribution minus fixed cost, we got EBIT. From EBIT, interest on debt at 12%. So in the problem, debt is given. In the problem, debt is given for three financial plans. In the first plan, we have a debt of 10,000. So 12% of 10,000, 1200. Then 12% of 5,000, 600. And 12% of 15,000, 1800. So this is the interest on debt. Subtract the interest on debt, we'll get PBT. EBIT minus interest, we get PBT. Now we apply the formula. DOL is equal to C divided by EBIT. 8,000 divided by 6,000. 8,000 by 6,000. This is DOL. DFL. DFL EBIT by PBT. 6,000 by 4,800. So there are 6,000 by 5,400. 6,000 by 4,200. DCL. C divided by PBT. 8,000 by 4,800. 8,000 by 5,400. And 8,000 by 8,000 divided by 4,200. Or else you can multiply 1.33 into 1.25, you must get 1.67. Similarly, 1.33 into 1.11, you should get 1.48. Multiply, you get 1. These are the calculations. We have calculated DOL, DFL, DCL for situation A. Same procedure we have to follow for situation B. In situation B, the fixed cost is 4,000. Here 2,000, it is 4,000. See here, the sales and variable cost will remain same. Every situation, the changes are occurring from fixed cost. Changes जो हो रहे हैं वो fixed cost के बाद changes हो रहे हैं. Fixed cost से पहले कोई change नहीं है. तो instead of writing again sales and variable cost, we begin from contribution. क्यों unnecessary sales और variable cost बार बार लिखते हैं? एक बार लिख दिया काफी है. एक बार आ गया same यहाँ पर भी वही रहेगा. 24,000, 16,000, contribution 8,000. So I'm starting from contribution 8,000. Contribution 8,000 से शुरू करूंगा. और उसके बाद फिक्स्ड कॉस्ट यहाँ पर 4,000, यहाँ पर 2,000 था, अब चेंज हो गया 4,000. तो सेल्स कंट्रीब्यूशन माइनस फिक्स्ड कॉस्ट वी गेट EBIT. इंटरेस्ट ऑन डेट सेम 12%, 1200, 600, 1800. PBT आ गया. नाउ अप्लाई द फॉर्मूला फॉर DOL. सेम फॉर्मूला यहाँ पर जैसा फॉर्मूलाज अप्लाई करे, यहाँ पर भी सेम फॉर्मूलाज अप्लाई करे. वी गॉट दिस वैल्यूज. सिचुएशन C, फिक्स्ड कॉस्ट इज 6,000. अब यहाँ 4,000 था, यहाँ पर 6,000 हो गया. Contribution 8,000 minus fixed cost EBIT less interest on debt PBT, same calculations. So we have calculated the DOL, DFL, DCL for all the three situations, for all the financial plans. Now it is asking you, show what is the combination of OL and FL, in which case the combination of OL and FL is the highest and the lowest. Combination of OL and FL means DCL. कॉम्बिनेशन ऑफ OL एंड FL मींस DCL. तो DCL कब हाईएस्ट है और कब लीस्ट है? तो ये टेबल बनाकर मैं हाईएस्ट और लीस्ट वैल्यू मालूम कर रहा हूं. तो टेबल में क्या है? सिचुएशन A, सिचुएशन B, सिचुएशन C. इन ईच सिचुएशन वी आर हैविंग 3 प्लान्स. प्लान 1, 2, 3. हियर आल्सो प्लान 1, 2, 3, प्लान 1, 2, 3. ऑल दिस DOL, DFL, DCL हियर वी हैव कैलकुलेटेड. यहां पर कैलकुलेट कर लिए. ये फर्स्ट सिचुएशन में DOL, DFL, DCL, ये सारी चीजें मैं यहां पर कॉपी कर लूं. सिमिलरली सिचुएशन B. In situation B, here DOL, DFL, DCL, all these values I have copied in second situation. Then situation C. In situation C, we got DOL, DFL, DCL. I have taken here. Right? Only leverages I have taken in this table, not calculations. Calculation part we have completed here. Now combination DCL. अल्टीमेटली हमको चाहिए DCL, क्योंकि DCL में दोनों भी आ गए OLFL। तो हाईएस्ट DCL कितना है, देखो ये द हाईएस्ट DCL इन दिस केस इज 40। 40 is the highest DCL. In which situation, in which plan? The 40 is in situation C. And financial plan 3. The highest combination of DOL, of OL and FL, which is in situation C and plan 3. The highest combination of OL and FL is in situation C and financial plan 3. What is the lowest of this DCL? 1.48. The lowest combination of OL and FL is 1.48, which is in situation A. And plan 2. Situation A, plan 2, we have lowest value, and situation C, plan 3, we have the highest value. That's what it is asking. Similarly, next, 13th problem. Calculate OL and FL under situation 1 and 2 and financial plans A and B. This problem is similar to the previous 12th problem. The only difference is there we have 3 situation 3 plans. Now we have 2 situation 2 plans. 2 situation 1 and 2 and financial plans A and B respectively from the following information relating to the operation and capital structure of a company. What are the combination of OL and FL which gives the highest and the least value? Installed capacity 2000 units, actual production and sales 50%. मैक्सिमम प्रोडक्शन 2000 यूनिट है, लेकिन एक्चुअल प्रोडक्शन जो हो रहा है वो 50%, आधा। तो 2000 का हाफ 1000। सेलिंग प्राइस पर यूनिट 20, वेरिएबल कॉस्ट 10 रुपीज, फिक्स्ड कॉस्ट सिचुएशन 1 4000, सिचुएशन 2 5000। Then we have capital structure, financial plans A and B. In A plan we have 5000 equity, 15000 debt, total 20000. In B plan 15000 equity, 5000 debt, total 20000. Exactly similar problem. This is problem number 13. Calculation of leverages. Situation 1. Fixed cost rupees 4000. Plans A and B. Sales. The sales are given as 1000 units into rupees. Selling price per unit is 20. Less variable cost 1000 units into rupees 10. Sales minus variable cost will get contribution minus fixed cost. Fixed cost is 4000. This is called EBIT. Interest on debt. Interest on debt is 10% of 15,000, 1,500. 10% of 15,000 is 1,500. The 10% of 5,000 is 500. That's all. So we have calculated up to PBT. C, contribution 10,000 divided by EBIT 6,000, 1.67. Similarly, contribution 10,000 by 6,000. Then here EBIT by PBT 6,000 by 4,500, 1.33. उसी तरह 6,000 by 5,500, 1.09. C by PBT 10,000 by 10,000 divided by 4,500, 2.22. Similarly, 10,000 divided by 5,500. We can confirm it. 1.67 into 1.33. It is 2.22, correct. 1.67 into 1.09, 1.82, right? Our calculations are correct. Confirmed. Now, situation 2. Situation 2. Fixed cost is, how much is the fixed cost given in the problem? It is 5,000. 5,000. Now instead of 3 plants, we have to make it 2 plants. Instead of 3 plants, we have to make 2 plants, A and B. Now contribution. How much is the contribution we got? 10,000. Less fixed cost. Fixed cost is 5,000. Interest on debt at the rate of 10%. 10%, 1,500, 500. So it will become 3,500 and 4,500. Now we can calculate the DOL, DFL. So first of all, DOL, C divided by EBIT, 10,000 divided by 5,000. That is equal to 2. Similarly, DFL, EBIT by PBT, 5,000 divided by 3,500. That comes to 1.43. Similarly, EBIT by 5,000 divided by 4,500, 1.11. C divided by PBT, 10,000 by 3,500, 2.86. Here 10,000 divided by 4,500, 2.22. Now confirm it. 2 into 1.43, 2.86, right? 2 into 1.11, 2.22, right? Our calculations are correct. Now we have to make the comparison of the highest value and the least value. Highest value and the least value. Situation 1, situation 2. Plan A and plan B. Plan A, plan B. Now, situation A, 1.67, then 1.33, 1.09, 2.22, here it is 2, 1.43, 2.86, 2.22, that's it. Now we have to find out the highest value and the least value. The highest value of DCl is 2.86. The highest combination of OL and FL is 2.86, which is in situation 2 and plan A. Situation 2, plan A, we have the highest value 2.86. The lowest combination of OL and FL is 1.82. Which is in situation 1 and plan B. That's it. Highest value, highest combination of OL and FL is 2.86 in situation 2, plan A. Lowest value is 1.82 in situation 1, plan B. That's it. Problem number 14. Calculate the degree of operating leverage, degree of financial leverage and combined leverage to the following data. Sales 1 lakh units at rupees 2 per unit. Variable cost per unit 70 paisa. Fixed cost 1 lakh. Interest charges 3000. Which combination of operating and financial leverage constitute a risky situation and an ideal situation? So apart from calculating the ratios in this problem, we have to give the explanation regarding risky situation and an ideal situation. 14th problem. Calculation of leverages. Sales 1 lakh units into rupees 2 minus variable cost 1 lakh units into rupees 0.50. Fixed cost EBIT interest charges PBT. Or now we have to calculate degree of operating leverage and degree of financial leverage. Contribution is 1,30,000. EBIT is 30,000. EBIT, PBT. $4.33. That's all. It is asking you to calculate the leverages. We have calculated. Now it is asking you to explain about the risky situation and the ideal situation. In theory session, we have already discussed a risky situation is that situation where OL and FL both are high. Risky situation. It is that situation where both OL and FL are high. दोनों भी अगर ज्यादा है, OL भी ज्यादा है, FL भी ज्यादा है, तो इस सिचुएशन को रिस्की सिचुएशन कहते हैं. और रिस्की सिचुएशन में क्या होता है? It may earn very heavy profit or it may incur heavy loss. Anything may happen. It's very risky. या तो बहुत ज्यादा प्रॉफिट हो जाएगा या बहुत ज्यादा लॉस हो जाएगा. तो ऐसे सिचुएशन को कहते हैं रिस्की सिचुएशन. So it is not suggested. It is not suggested for an organization to go in a risky situation. Don't keep very high OL and very high FL. Ideal situation. In this situation, one leverage is kept at a high level and the other leverage is kept at a low level. Normally, OL is kept at low level and FL is kept at a high level. It is called ideal situation. It is called ideal situation. So ideal situation is that situation where one leverage is kept at a high level, the other leverage is kept at a lower level. Normally what will happen? OL will be kept at a lower level and FL will be kept at a high level. This situation is called ideal situation. दोनों भी ज्यादा है तो रिस्की. अगर एक ज्यादा एक कम है तो आइडियल है, और उसमें भी अगर OL को कम रखेंगे और FL को ज्यादा रखेंगे तो that is an ideal situation. 15th problem. The following is the balance sheet of a company. Liabilities, equity share capital 60,000. Rupees 10 per share, so 6,000 shares are there. 10% long-term debt 80,000. Return earning 20,000. Current liability 40,000. Total is 2 lakh. And net fixed assets, current assets. The company's total assets turnover ratio is 3. Its fixed operating cost are 1 lakh and its variable operating cost is 40%. Income tax rate 50%. Calculate for the company all the 3 types of leverages. First question, you have to calculate all the 3 leverages. Second question, determine the likely level of EBIT if the EPS is rupee 1, rupees 3 and rupees 0. So what is the likely level of EBIT we have to find out. When EPS is given, so we have to find out what is the likely level of EBIT. So first of all we calculate the ratios. One ratio is given, total assets turnover ratio. Total assets turnover ratio is 3. The formula for total assets turnover ratio is sales divided by total assets is equal to 3. Sales we don't have, but total assets is given in the problem 2 lakh. Three twos are 6 lakh. So we got sales as 6 lakh rupees. Sales as 6 lakh rupees. Now we'll start the problem. That is calculation of leverages. Sales just now we have calculated 6 lakh less variable cost. So variable cost is given in the problem 40%. 240 means 360, 3 lakhs, 3456 for our contribution. Fixed cost. The fixed operating cost is 1 lakh rupees. Interest charges, interest on debt. Interest on debt is 10% of 80,000. $8,000. 2,52,000. This is PBT. Less income tax. Income tax is given in the problem at the rate of 50%. So 252, 1,26,000. This is PAT, profit after tax. Number of equity shares. How many shares are there? 6,000. 60,000 rupees is the share capital and the face value of each share is 10 rupees. So 60,000 divided by 10, 6,000 shares. EPS. We don't have preference. $1,26,000 divided by 6,000. 21 rupees. Then we have to calculate DOL, C divided by EBIT. DFL, EBIT divided by PBT. DCL, C divided by PBT. 3 leverages we have to calculate. First one, contribution. Contribution is 3,60,000 divided by EBIT 2,60,000. 1.38. EBIT by PBT 2,60,000 divided by